Hello, every one of you. Welcome to today's class, and this is your very own Mr. Cloud Olika. So, please, before I proceed, if you've not subscribed, do that now. If you've not shared, like, or comment, do that now. Please, this is how you help my channel grow. So, today is going to be a very sweet topic, a very simple topic, and a very interesting topic. So, this topic today is called the stochastic. So, now, the first thing we have to learn is an intro. What is a stochastic? When you hear of stochastics, what does it mean? So, the stochastic is an indicator, a momentum indicator. We have pivot indicators. The pivot indicators are indicators that are the price don't move with the market's momentum, just like we have the CPR, we have the ATR. Those are pivot indicators. So now, when we talk about momentum indicators, are indicators that moves together with the market, just like the moving averages and stochastics and the rest of it. So today, the oscillator, the topic we're going to be learning today is a stochastic. I know most of you have heard of stochastic. What does it mean? So now you need to understand that stochastic is a momentum indicator, which means the price movements moves according to what the market is saying. If the market is saying A, the stochastic is moving A. If the market is saying B, the stochastic is moving B. It flows through the market. It flows through the market. And the stochastic is best used for scalping. Like if you just want to trade, and make money out of this. So now we'll go into our chart so we can understand exactly how to have the stochastics in our chart. So the easy thing you're going to do is very simple. You click on your indicator, you type the stochastic. You will see this stochastic RSI, stochastic slow strategies, volatility. You will just see rest of it. So you just have to click on this first one. So when you click on it now, by default, the setting should be, let me just click on it so it can be my chart so you can see, because I've already reconfigured this. So by default, the length should be 14. Everything will be the numbers. Everything is going to be length will be 14, smoothing and everything. So now this is a stochastic indicator. If you notice, it's always having all these move because it's a momentum. It's moving with the market. It's not like the CPR that are pivot indicators that are not movable. So the stochastic is going to help you see crazy result. Most of the times, people use the stochastic to make so much money, so much money, and I'll tell you and teach you guys exactly how I use it, and that way you are going to see good results in your trade. So now, after you've known what a stochastic is, I said a stochastic is a momentum indicator, which is an indicator that is used to for trading where the market is moving at a very strong momentum. You use the stochastic because it moves together with the market. Whatever is forming in the market, it goes together. So now, one of the things you should understand now is the settings, because most of you will have this confusion. The settings. So we have to go into the chart so you can see exactly how to set the stochastic to get the best result. So let's go into our stochastic now in the chart. Now you see that this, I just wrote something in front of you, the length. So now the first thing you should watch out for is the length. By default, this is 14. So if you want to trade the stochastic, you have to go to this place and change this to 18. This is how I use it whenever I want to use it. Remember, I told you guys in my RSI lecture, I said to you guys that the more uh the length is, the longer the length is, the more powerful the entry confirmations become. So this is going to really help you now understand these markets. So now the length now will be 18 for me. So this is the length you should set. So now you go like this now to make this line thick so you can see all of this. So you can do it like this so the lines can be thick, or this is better. You go down here again and you make it thick so you can see it clearly. So the reason why I have it this way thick is so I can see exactly what is going on in the market, exactly what is happening in the market. The stochastic manual is going to give you crazy entries, like you're going to get so many entries on a particular trade. That is why the stochastic is a momentum indicator. Most people use the stochastic to make crazy money. You just want to just be trading and trading and trading and trading and trading. You can use the stochastic for such trades, entries, and results. So now again, you've known what the length is, so write it somewhere. So your stochastic length should be 18. You can go as more as you can to make it 20. The choice is yours. Always back test whatever I teach you. Always check back in time. Always try to test everything I'm teaching you. So you can decide to make it 20. That is if you want more stronger confirmation entries. The choice are all yours. However you want to do, the choice are all yours. So now I just told you all the best settings for the stochastic is what? The 18. The length should be at 18. Then you can fatten the lines by increasing it to the sizes you want. So now again is the strategy. What is the strategy? How do you trade the stochastic to get result? What is the strategy? With the stochastic, you can make $100 to $1,000 daily, depending on how crazy you are following this indicator. So let's go into the chart so you can see how you can trade this and get result. Remember, no strategy guarantees 100%. No strategy will give you wins without losses. You are definitely going to incur losses, but your risk management, your stop loss is what is going to limit your loss and end up making you a very profitable trader over time. So now this now is in front of you. Now I've told you all how to change the line, edit this, and the rest of it. So what do you trade in stochastics? What are the things that you trade in stochastics? This is what you are going to watch now. So listen now. Pay very close attention to whatever I will show you. So the first thing is, now you see crossovers. These are what you see. Like looking at the stochastic now, you will see that, oh, there are lots of lines. So what do you trade in stochastics? It's very simple, the crossovers. So whenever you see, when the yellow line is on top the blue line, you sell short. This is the blue line. This is the blue line, this is the yellow line. So now looking at this now, you will see that this yellow line now is on top and this now is underneath. So what happened? The price now went down to this level. Do you understand? So whenever the blue line is on top, the price goes up. So looking at this now, you see here the blue line came on top. This line, what happens? The price went up to this level. So whenever you see the stochastic, it's just like when you're trading the dead cross and the golden cross in my moving average video. So now looking at these crossovers now, you understand that whenever you see the yellow line above the what is it called, the yellow line above the blue line, you sell short. Whenever the blue line is above, you buy long. Looking at this level now, you see that the blue line came above this at this point here. So now you see the price actually went high to this. I always tell you all this, please, no strategy guarantees 100%, but every strategy, if mastered well, can make you millions, can make you really profitable. Yes, you're going to incur losses, but you need to know exactly what you're doing so you don't incur losses. So now when you're trading using the stochastic, you should also set your stop loss. That is the most important thing you should learn before now. So know how to set your stop loss. Set your stop loss regardless of whatever entry the stochastic is giving you. Let's say for instance now at this level now, we got an entry confirmation that we had a crossover here, which is the blue came on top of this yellow. So we got an entry confirmation at this level. So this is what we do. Let me show you what I will do if I see these happen in a chart. So now this is what I will do after I get my entry confirmation here. This is a bullish close, so this is my entry. My stop loss now will be here, so I'll be looking for to make something like this or like this. So you see, looking at this now, you will see why it's very important that you set your stop loss, because if you do not have stop loss and you're looking for too much profit, when this crash will happen here, you would be in great loss. So when your stochastic now gives you an entry confirmation, just a little above it should be your stop loss. So now looking at this, now we got an entry confirmation here. So now this now is going to be my stop loss, and this is my entry. So I can be more conservative a little, and I can move my stop loss to this level. Then I'll be looking at making either time one or whatever of my size. And if you look at this, this is actually a winning trade. Why? I have my stop loss. So if at all this trade goes against me and boom, I would not be held responsible for my losses, and the losses will not be significant. So now looking at this, now you see, if you did not have your stop loss and this trade happens, you will be in great loss, because your entry was here. You will see you're going to lose so much already in this market. So this is what you should know. So the RSI is important. You trade the RSI crossover lines. Whenever the blue line is above, it is telling you that this market is going to go up. Whenever the yellow line is above, it shows that the market is coming down. Yellow signifies downtrend, green signifies entry. So to make you understand it better, I can choose to change the colors. So let me make this green. Then let me make this, sorry, let me make this yellow, red. So you can also do this too for you to understand. So whenever you see the red line on top crossing over like this, now is a crossover. This is a crossover, and the red came on top. So this is telling you that this market is in a downtrend. So these are crossovers, and the red came on top, downtrend. These are green crossovers. The green came up uptrend. You understand? So this is very simple. This is what makes the RSI a very simple and a scalping strategy. So when you are scalping using the RSI and it's giving you an entry confirmation, just a little, if my entry confirmation now at this level was here, this is my entry, because the RSI gave me a crossover here, this is my entry. My stop loss can just be a little above here, and I'll be looking forward to make this. So remember, when you're trading the RSI is a very short-term trading strategy. It's not something you wait or allow it to play for a very long time. You will end up losing your money. So now again, let me tell you all, this is very important. Looking at this chart now, you will see that this chart looks like the what is it called, the RSI, this 70 and 80 line. Don't worry, there's something I'm still going to teach you all in this video. So let's just continue learning. So now you know the strategy, the simplest strategy, which is the crossovers. Very important. So now another thing you should understand again is time frame. So which time frame is best for the stochastic indicator? Which time frame gives it accuracy? One thing you should understand is that the stochastic is a momentum indicator, which means it moves faster with price. It works more with the price action. So you have to use the lower time frame, which is the 5-minute time frame is the best time frame for the stochastic indicator. So another thing again you should know is the market condition, because every market has a condition, every market has rules, every market has things that is telling you that, oh, this market is going to be successful or it's not going to be successful. Like I told you all, the RSI is not good in a trending market. The stochastic is very good in a trending market. Why? Is because the stochastic is a momentum indicator and oscillator. So as the price is moving, that is how the stochastic is moving, creating crossovers for you, doing the calculation, the arithmetics for you. So now let's go into chart, so I'll make you all understand something very important. So looking at this chart now, you will see that we had a whole lot of crossovers. And one of the things you should know is that you can also trade this like the RSI. What do I mean by that? You could say you are only going to trade crossovers only when they are at a level closer to your because now let me just tell you all something. Just pay attention. This line now represents resistance. This line now represents support. So if this crossover comes down here, a sensitivity that is going to go up. If this crossover happens here, sensitivity is going to come down. So always trade crossovers when they are between 70 and above. Crossovers when they are 30 and below. So this is it. Let me just write it out. So what I just show you all now is a cheat sheet I just gave to you all now. So I said the stochastic crossovers, sell short should be 70 and above. Looking at this now, you will say, okay, I can make it, sorry, I can make it 60 and above, sorry, 60, uh-huh, 60 and above. Then here now should be 40 and below. Yeah, so this should be what you're seeing right in front of you is a cheat sheet I just dropped for you all now. So now I said the stochastic crossovers sell short 60 and above. So what does it mean? It means that when the candle is giving you a crossover at this level, which is when it's giving you a crossover at this level and above, you are safe to sell short the market. When it's giving you a crossover at 40 and below, so can you see what I'm trying to make you understand? So whenever you see crossovers happen at this level, is good. So anything from 50 here is a danger zone. So do not trade crossovers that are happening in the center of the chart. Like I tell you all, if you draw your support and resistance, this is your support, this is your resistance. Do not trade sell short or buy long uh candles that appear in the center. So it's always a no. So now this is just the cheat sheet. So now, whenever you want to trade crossovers, so make sure that the crossovers are from 60 and above for you to sell short to say, okay, the market is going to crash. But you can be more conservative, you can be more disciplined, and you can choose to say, I will only trade whenever it is from 70 and above crossovers or 30 and above. The choice is yours. It is yours. So you have to make the decisions yourself. You have to know how to do this yourself, because when you start blowing off your account or when you start making money, I will not be there with you. I am only teaching you what works for me. It's left for you to advance the knowledge. It's left for you to learn more. It's left for you to do as you please with the information that you have gotten from me. So the stochastics crossovers are very important. It's very important you know how to trade this, because this is a scalping indicator. There are some professionals that I know that only trade uh using stochastic, and they are very mindful, because no matter what the stochastic is doing there, they always have their trend line on any chart, and they always have the support and resistance on any chart, because whenever you have this support and resistance and the stochastic is giving you a crossover confirmation, you already know what you are doing. Do you get? So you already know what you're doing. So this is what you should know. So you can write this out somewhere, and remember the stochastic indicator will work best in any market, but it will ruin you when an event happen in that market, because a quick breakdown or pump can happen, and it can be the opposite of your entry. But the stochastic can work well, perfectly well in all market, because it moves with price. So it's not like the RSI that is only perfect in a ranging market. You understand? You can use the stochastic in a ranging market, in a trending market, but make sure you are very careful. Make sure whatever the crossovers the RSI is giving you, you have your support and your resistance drawn on the chart. You have it all drawn on the chart. So this is very important. Very important. So we do a recap now. An intro. I said the introduction to stochastic. Stochastic is a momentum indicator. It moves with what? The price action, what is actually happening in the market. It gives you crossovers, which determines your entries and your exits. So now the best settings, I said always make sure your length is 18. You can choose to make it 20 or 30. It depends on you. It depends on which you think gives more result. But what I mean to tell you is the longer the length, the stronger the confirmation entry, and the less entries you will have. Another thing again is a strategy. The strategies are the crossovers. So you need to know that you are trading the crossovers. Whenever it is at 60 and above and you see a crossover, you can sell short. 30 and below and you see a crossover, you can buy long. You can buy long. So the time frame is it. This is a quick. This is a scalping indicator. So don't use 15 minutes. Don't use 30 minutes. You use only the 15 minutes time frame for your scalping. So the market condition, all market condition, it works. All, all. But you just have to have your stop loss set at every entry you make. Make sure you have your stop loss. Make sure you have your stop loss. It's very important because without having your stop loss, whatever you're doing is a total bullshit because something can happen and you are ruined. So please watch the video again and understand exactly what you are doing. I remain your very own Mr. Cloud Oleka, and it's an honor to have you all here. And I hope to see you all in the next class.